Top of the morning, folks. I hope you had a pretty good night. I mean, hope you slept well. For my folks in West Africa, I hope you had a wonderful day yesterday. I mean, no words. We talked about dollar index yesterday on the weekly commentary, where we're discussing the possibility DXY gives us the bullish price action, and without benefit of pre-market trading, markets open on dollar index, we still discussed about price action on euro, give an extensive recap on the weekly review, talking about how we went through last week, which was actually beautiful. So currently this is DXY, this is the weekly time frame. We probably may not be able to see it clearly. Okay, you see it now. US dollar index weekly chart. So one of the major talking points of the weekly commentary was how I kept on hammering on the fact that we are currently like in distribution, because the market is going to see like a downside delivery very soon. And truthfully, I'm still sticking with that fact that we're going to see heavy shots on dollar index very soon. And the question is this it? Well, I still do not know. Okay. One of the major talking points here is we're in consolidation, okay? And what do I mean? If you look closely, you see how markets in this particular week we ran through previous weekly high, returned back, although markets didn't trade into the previous weekly low, of course, and rallied, traded above previous week's high, and we're having 2 down weeks already. Okay, so you notice that after a run on the query here on the weekly chart, we begin to see an impulse price swing on dollar index, and that's a clear indication of consolidation. Okay, major price moves during consolidation that doesn't happen from internal range. Okay, that's what I'm trying to say, if you want to write it down. Okay, but for trading markets, you see once the market trades above previous week's high, it returns back into the previous weekly range and expands again. Okay, and that's how it is, return back into the previous week's range and expand. But when you see markets running into external range, but now mind you, here the prices walked the rejection block here, so, and that's why something to note. And the trade above would buy side here for the sell and all of that. So we are not getting a continuation from the previous week's range, we're getting outside, or actually we're not getting continuation from within the previous week's range, we're getting outside the previous week's range. And that's clear that the market is consolidating, and we are currently range bound, and pretty much we can define the range. If we want to define the range, we can define it using this candlestick here, this candle here, the 30th of December candle. Okay, we can define here, and we can define it here. Okay, so we're currently trading inside this range. Now this range is very, very subjective. Okay, someone could come up literally and call out this price range. Okay, this high and this low, which is also very fine. Now, one of the reasons why I'm talking about this range is because it's pretty important that we note that the second week of January's trading was when we're talking about continuation of dollar index, and the market essentially just ran very deep into the range. And look closely, there's a fair value gap here, an old breakaway gap, and market essentially left this breakaway gap to trade high. So I think this is the reference point, and for me personally, I really do not care what dollar index is going to do now in near term. I'm willing to sit still. I'm willing to sit still. And now it now makes me ponder about last week's price action when markets ran external range on Euro USD into a key level on the daily time frame, and I was talking about how the market is going to rally into a near term. Now, on that particular tweet, my first thought process was Euro dollar index may be finally trying to get into this fair value gap here. Okay, as soon as we started seeing prices return back into range, this was what I was eyeballing. And the only thing that made me switch my thought process was the daily time frame. Okay, when we began to see markets respect the daily discount fair value gap, and that's the only thing that took my that made me just, okay, I think that's not going to be it, because if you look closely, you can see how prices respected this fair value gap here, okay, with the consolidation here and a bullish day here. So this price action, okay, was bullish for me. Okay, I was thinking we're going to have the last run here for buy side, then this is one high, second high, then a true drive potentially, and we could just see dollar index maybe resume bearish. And yeah, I've gotten the hang of of the cut on barchart.com. I mean, a very good friend of mine, Funjo, thank you. He texted me and said, Chief, I saw you're struggling with. I said, yes, so I have not used barchart in a long time. Instead, someone built an indicator here on TradingView that I could easily use, the agent program data. Okay. Anyways, so currently we are trading within this range, and we have relatively equal lows here on dollar index. We have sell side into a fair value gap, and I think that's going to be the draw on liquidity. I think this is draw on liquidity. In fact, I'm not going to be doing anything on dollar index until dollar index trades into this fair value gap, because you cannot continue inducing my buys by trading above previous week's high and giving price action and expecting me to go in there and then you just do something else. I mean, yesterday was you can imagine they used the election week to manipulate heavily in euro, and I was actually stopped out from my position last week because I was holding a euro USD sell setup, and having not to do anything, I was seeing movies and New York session. I went to chat and I saw that. I'm like, what's that? Like, no big guy does with this. Anyways, so this is a draw on liquidity, and in fact, I'm not going to do anything. I'm going to act under the impression and bias that high time from order flow has changed, which it has literally, but I still think the market needs to price into a discount, and all of this consolidation. Okay, we could run through sell side here, and something forms bullish, and I'm going to engage if something forms bullish. Trust me, okay, because I think that DXY would hit objective first, and then we can possibly see a reversal. Okay. Okay, Ink network. I mean, why would you have an internet subscription and pay a lot of money for good internet services and still not enjoy the benefit of your money? I mean, I can't put my head around all of these things happening in this country. To receive you. So I think I didn't give a shit, and the internet just happened to respond. Okay. Um, on my part, there could be a tiny detail I missed, but I really don't like doing this kind of stuff. After the fact of it, because my own standard is I prefer to call prices like I always do, always, and then talk about price action in hindsight after the fact. Um, you understand? Meaning, after I called it, I then now prefer to call it hindsight. So you can see we hit this weekly key level here, but the disturbing truth is that DXY didn't exactly, except that DXY has been mumbling at the close of the monthly fair value gap, because if you look at the dollar index on the monthly time frame, you would realize we've been consolidating at this monthly fair value gap above this old high, and literally that's what price action has been. Now we have about 2 more weeks to generate trading, and truth is, if this candle remains like this, or if we continue to consolidate like this in January to the end, February is going to be bearish, and they really will be looking at this fair value gap as we draw on the curve then. Okay, but we need January's candles closure to validate the high time from order flow. Okay, and we already said, I said dollar index is bearish now. Okay, sentiment has changed, dollar index is bearish. Okay, and because of that we want to be careful. And fun fact, we are now in consolidation on the weekly chart, and that's why markets has been like this. Okay, so, and honestly, if that's the whole point of everything, if you had trades on from here, and made a lot of money from trading here, this wouldn't mean anything. As soon as the market closes fair value gap here, you want to be waiting. And this is exactly the reason why I was talking to myself saying I want to wait as soon as the market closes this fair value gap. I do not care about what price action is. I'm not interested and stuff. But this is me still this is me still executing, right, based off of whatever I'm seeing on the weekly time frame, and that's why it's low probability, in fact. Okay, because I said low probability trading when markets hit a key level, and that's why now I've taken a loss trading euro, because I'm trading low probability environment. Okay, for me to fix all of this, it's either I wait, or I do not consider, or I don't know. I do not want to predict the market. I don't want to say as soon as markets trade into the weekly fair value gap, and suddenly we're really going to have that short-term trade into this level here. That's the close of this, into this weekly order block. You understand? So I don't want to predict that. Okay, this again. Okay. I literally just zoomed in, zoomed out. Okay. Restarting it won't solve it, but alright. And there goes me again. So basically my point is, now we'd have to be careful, and literally I'm going to be on sidelines often. My intention would be, can I capitalize on any trades that takes me here? Well, if I get something on daily time frame that validates this bias, then I'm going to do something to run a trade, put on a trade that runs into sell side liquidity here. But for now, I do not think I'm going to be getting that off frame in the new in the London session. I don't know. Possibly I could get that kind of trade in the London session, because currently market's trading into this far fair value gap here, and this far fair value gap, and we're yet at the midnight New York, so this market's trading. So just gonna wait and see what happens. So during the London session, I think we have something in the EC. There is the pound and the euro sometime later, and the Canadian dollar. But basically, I'm just gonna wait and see what happens. I'm gonna be watching price action today, intraday. On intraday, yes, as an intraday, because of course I cannot see the detail when prices trade into this gap on the 4 hour time frame, except if markets begin to consolidate. Now, my interest to go shorts today, I wouldn't know, depends on price action, because I do not want to trade in continuations in market like this, because I could be wrong again and the market just simply utilizes one of these rejection blocks, and that's why I do not like consolidations. It's one of those markets I do not like, because most of my models they excel and do so well in trading conditions, and I did not even bother to train myself during consolidations, because I told myself that what's consolidation? It's usually accumulation or distribution phases in markets, right? That if market is going to establish new order flow below an old low, they accumulate, so those areas consolidate, and the next phase will be reaccumulation. So before the markets run into a buy side liquidity pool, a long-term buy side liquidity pool, because I'm talking from high time from an analysis now, and they could be in a reaccumulation phase. So my objective is to trade from accumulation to reaccumulation, wait a bit, and the market is done with whatever reaccumulation, and expands again for the distribution. So if I've gotten into trades early enough on the longer term, I do not need to trade during the distribution cycle, okay? Because that's what all of this is. Like I said there's been a shift in the all front dollar index. I've been saying it since the beginning of this year. I've been saying it, so we should put that at the back of our mind, that Settle Black has been talking about dollar index, and that's the reason why yesterday I opened barchart.com to look at COT hedging program, and to discuss price action there with every one of us. And it's because this is distribution, and I could be wrong again, and the market closes above. You can see this relatively equal highs, you can see these clean highs, and markets could just revisit these highs and sell off again. So I have no intention to be a participant really in this market. I just stay on the sidelines. I have peace there. I watch films and just go about my day. Probably during next week's commentary, I'm just gonna just talk about the COT hedging program, and I think I did something here. I just want to show those watching here. Just depends how fast the internet can really just process all of these. To make things very easy for me. I can't. Alright, here's my account. I'm fully loaded. Okay. Alright, so this is it. So this is it. I'm waiting for internet to process this, and I just of course, this is the COT hedging program. Okay, I did all of this myself. Okay, I did all of these things myself, but now there's a way for me to utilize all of this information trading view. Somebody has designed this. Okay, so I did all of this myself. Basically, if you do it yourself, you're not gonna. I was the one who put this line here, this line here, and this line here. This is showing the detail of commercial activity. Okay, and what I did was delineate the extremes of this and outline the midpoint of it to define an overbought and oversold market. So now I'm looking at it like an indicator, like above this line here is overbought, below is oversold. Okay, and just like that, it doesn't mean once it's above this line, overbought means it's bearish, and below this low, oversold means it's bullish. Rather, just think of it like that. But once it's above, that's buy program. Once it's below, that's sell program. And when you have the market structure shift, especially on daily time frame, when the COT has changed, and that's a true break of market structure. Something for you to note. So exactly, it's not like I'm really scared dollar index is going to break daily time frame market structure, because once it breaks, I'm really going to be anticipating what market is going to do. And that's why, if this is the draw on the query here, it means we're going to be running sell side here, right? And if we run sell side here, that's a market structure shift. So do we have a shift in trend then? So that's why I'd rather just watch and just look at how prices pan out, because I could still be wrong, not about bias. I could be wrong about the delivery, because we are in consolidation and the market could literally utilize this rejection block. Why? You can see this rejection block traded into this previous rejection block, round buy side liquidity pool here, and now we're returning back into the rejection block. This is high resistance liquidity run. So even in as much as we have a fair value gap on the weekly chart, which was a prior breakaway gap, the markets could utilize this to run higher again. Okay, but now note, a run higher again, I'm going to go short on dollar index, because we have one high here, another high here, and if she manages to make another high, that's short for me. Okay, I'll be looking for signatures on daily charts that could mean bearish, and I'm going to take my short on the XY, because there's been a shift in sentiment. I hope you found this pre-market analysis insightful. I mean, for me, my key takeaways: I need to be patient. There's going to be a very large range move very soon. Very easy price action, trending market. I'm willing to be risk on then than now. There's no need losing capital here and not being able to trade then. Okay. So and in fact, periods like that, day trading is going to excel flawlessly, because dollar index is currently at a premium market. Okay, and once we're beginning to sell off, I mean, each days will be easy. I mean, because now market is done with the distribution and all of that. They are trading off of appropriate higher time from key levels, and once you just put out the opening price, run through the opening price, break below the opening price, the fair value gap there, that's your silver bullet. And the time for you to trade 3 a.m. to 4 a.m. or 5 a.m. London time. Okay, 3 a.m. because 3 a.m. most times is when the manipulation occurs, but during trading conditions you can see London form its high at 1 a.m. 2 a.m. but you always find it set up at 3, because that's London session silver bullet. So I hope you found this one insightful. In the meantime, make me your matter.